Let's talk a little bit more about how we can use the trading range as a technical analysis tool when we're evaluating what might be going on here. And as we know, the range is the distance between the low and the high of a price. And we learned how we can identify spikes where there's these broad ranges in terms of the high and low, but there's other ways that we can use trading ranges as well. So let's look at some of those and kind of have an understanding of it. And it can be a leading indicator as far as a price change that is coming. And when we start seeing these ranges between high and low, there might be kind of something's coming. That's why we call a leading indicator versus something that's maybe more of a lagging indicator. So it can be very helpful that way as well. So if we look at trading ranges, and you can look at range expansion and range contraction. So if we look at these examples here on the left, we have range expansion. You can see that the price bars, just that middle part, if we're looking at that range, are lengthening over time. You can look from going from left to right, how they tend to be lengthening. And that would suggest a continuation pattern as far as, if it's expanding, that whichever way it's going, it could be up or it could be down, could be, continuing to go in that pattern or continuation. If we look at a range contraction, that's where the price bars are shortening over time. And you can see from the left to the right on the right-hand image there, how the bars are getting much, much shorter. And that suggests a trend reversal may be coming up soon too. So if we, as well as using these other indicators, we're going to learn all through the course, you start looking at range expansion, range contraction versus a continuation or a trend reversal might be being indicated by the patterns within the price bar themselves as far as what may be going on here. So range expansion and contraction don't tell us anything about the existing direction of the price move, just more so whether it would continue a continuation pattern or that trend might reverse, because it could go either way depending on whether they're contracting or expanding. But the range can expand or contract in both upwards and downtrends, so they can do it both ways, but it's more of range expansion is a continuation pattern, going to keep going the same direction, and a range contraction might show a trend reversal, or basically flattening out or changing the trend is the big idea behind that.